Hi, I'm James Robinson, and this is my stock pick of the week. This week's pick is Paychex, symbol Payx. This is the first of my 5-part series on Paychex. We'll talk in this video about an overview of the company. The next videos we'll talk about the company's operations, its balance sheet, the dividends, and the wealth creation characteristics of the company. So Paychex is a integrated human capital management solutions company. What does that mean? They're a HR, basically they're an outsourcing of HR. I mean, they do payroll, benefits, human resources, retirement, insurance services for small and medium-sized companies. They do payroll processing, payroll tax administration, employee payment services, regulatory compliance, et cetera, et cetera, et cetera. They also provide insurance in the forms of property and casualty insurance for workers' compensation, business owner policies, commercial auto, as well as health and benefit coverage. They do health and dental and vision, as well as life insurance for employees. So long story short, Paychex is an outsourcing of the HR department for companies that aren't large enough to have them. They're very, very efficient. They do a great job. My little real estate company uses Paychex, and they are the gold standard. They're extremely inexpensive relative to other options, and once they have you, once you're using them, it's just so easy to keep using them that you're not likely to change. And they do a good enough job that you don't really have a reason to change. And so I think this is a company that is in a really strong position to withstand this economy, because companies are going to go back. They're going to probably downsize the amount of revenue they're earning, because companies don't need as much payroll when they're laying everybody off. But they're all going to ramp back up again, and when they do, they're going to go right back to Paychex. To give you a sense, Paychex has about 670,000 companies who utilize them. Those companies have about 12 million employees. So they've got an extremely diverse client base, and no one company going out of business is going to hurt them. When a company goes out of business, new companies come into business. We're always formulating new enterprises in America. And as those companies get more and more successful, they need a company like Paychex until they're large enough to have their own PR department. And oftentimes then, they're still better off to use Paychex for at least some, if not all, of these services. So as of March 28th of 2020, the company's market cap was $21.58 billion, so a pretty good-sized company. They had revenues of $4 billion. They had profits of $1 billion, so better than 25% margins from gross revenue to profit to the bottom line. That's spectacular. That's really, really strong. The company's PE ratio is 19.6. That's a little higher than I usually like. However, it's the lowest PE ratio this company has had since 2012. This company's really on sale. The company's PE ratio was closer to 30 just a few weeks ago. The company's market cap was 21.58, but it was closer to 30 billion before the coronavirus hit. So we're buying this company at a 30% discount to the market. Company's yield is 3.78. Obviously, that's because the company's stock price has been taking such a long-term hit, or such a significant hit. And the company has long-term debt of $990 million. So they have earnings annually of $1 billion, and they have debt effectively of $1 billion. So less than a year's income to pay off all of their debt if they wanted to do that. That gives you a sense of the financial strength of the company. The other thing I want to talk about is the yield, 3.78%. I would not be surprised if the next 2 quarters aren't really bad for this company. And I don't know that they'll cut the dividend. I think they probably won't. I think they'll try and maintain that dividend. They have the resources to do that. But it's going to be a while before the stock price comes back. And the fact that we get some dividend while we hold this stock, it makes me feel good. As I'm looking at companies in this environment, I'm looking at companies that have very simple business models, that have significant and diverse client bases, that have a good dividend yield, so I'm getting something while I wait, and that have relatively low debt. And so when you look at those criteria, Paychex meets all of those criteria. And it's also a company I've been following for a long time, waiting for an opportunity to buy. And if you look back, you'll see that I bought Robert Half and Associates, I bought Manpower. Those are companies in sort of the same industry, but they're not as good as Paychex in terms of a company. They were just cheaper relative to Paychex that I bought them, and I think we did okay on those, or we're doing okay on those. But this is a company that's the gold standard, and now we're buying it at a discount, buying it cheap. So here you can see the overall grades for this company. Again, I grade companies on a scale of 1 to 4, and I grade them in three broad categories. One is operating capabilities. That's how good a job and how efficient a job the company does at providing goods and services to their customers. I measure a company on financial issues, which is really their balance sheet and risk and debt, and how much risk the debt the company has imposes on the customer, on the financial strength of the company. And finally, on management. Management is really a function of what kind of job does the company do at returning profits and wealth to the shareholders, either directly or indirectly. So you look at those three categories, you can see this company is really, really high. It's in fact it's the sixth highest rated company of the 927 companies that I looked at. So again, excellent company. Can almost say to buy it without reservations. So just by way of summary, this is the sixth highest company that I've rated, so I think it's a fantastic company. They have a very broad customer base. That's one of the things that I really like about the company. 670,000 customers, 12 million employees. So no, they're not going to get hurt by any one company going out of business. They're not even going to get hurt by an industry getting hammered through this. They're going to manage to come back and come back strong. They'll be hurt in the short term due to the coronavirus, no doubt. I don't know that they'll be hurt more than most companies, but I don't think they'll be hurt less than most companies. I think they're going to sort of be in the middle. I've been looking for years to buy this company. They have virtually no debt relative to their earnings, less than a year's earnings in debt. So I look at this as being a long-term hold. And I want to talk about that for a minute. Last year I got grief from a number of you, and probably rightly so, for kind of being a quick buck artist, getting into a stock, taking my money and running after a quick profit. And, you know, in a vacuum that you didn't have a chance to see me, what I've been doing in my investing for many years, you would think that that's my MO, but it really isn't. I am typically a long-term buyer and holder of stocks. But in 2019, I felt that the market was getting ever and ever more and more overpriced. I was having a very hard time finding companies that I liked to own, that I thought were cheap enough. And so when I found companies that were cheap, they were only sort of marginally cheap enough. And so I bought them, and when they made a quick run because the market was so hot, they quickly got to the point where I thought, you know, this company's more likely to fall back a significant degree in a recession or in a bad, you know, coronavirus-like event than they are to stay really high. And so I just took my money and ran and went and found something else to buy. But that's not typically what I do. What I typically like to do is find a company that I think is a great company that I bought at a steal of a price and just hold on to it for a very long period of time. So this Paychex is a company that I envision being like that. I envision Ventas being potentially like that, maybe less so. I'm a little concerned about their debt levels. And certainly SEIC, the SEI investment company, I think is a very long-term hold. So hopefully what you'll see is that in the coming years, these stocks will be sort of part of my portfolio for a significant period of time, unless they get really, really overpriced or something fundamentally changes. So you'll see these stocks, and then there'll be some stocks that I'm buying and selling with greater frequency. But generally, I like to have 50 or 75% of my portfolio in stocks that I've owned for a long, long period of time. So we'll see if that is what happens. In any case, I hope everyone's staying safe. I hope everyone's healthy. I'm thinking about you guys. I'd love to hear how things are coming along in your part of the world, wherever you are. Are things getting better? Is it worse? Is it scary? Just give me your thoughts. Long story short, I think the market is relatively cheap. In fact, I think it's actually very cheap. I think that if we buy and we're patient, we're going to do real well with these investments. And so I wish everybody the best.